Hello, entrepreneur. Today we are going to talk about the world's largest asset manager, BlackRock. Get to know the world's largest asset management company. Very famous within the financial market, BlackRock is an American global investment management company. When an investor looks for ETFs, exchange-traded funds, they will probably come across BlackRock. What is BlackRock? BlackRock is an asset manager that works with a long-term strategy in its funds. The main products of the manager are ETFs, index funds. Today, most of the resources managed by BlackRock come from institutional clients, such as governments, pension funds, sovereign funds, and others. Thus, with so many resources under management, this company is among the main shareholders of the largest companies in the world, such as Apple, ExxonMobil, and the big American banks. As the largest asset manager in the world, in practically every place there will be products from the American institution. When did BlackRock emerge? BlackRock was founded in 1988, initially as an asset manager, and today it is responsible for managing a total wealth of more than $8 trillion. Currently, this company has more than 16,000 employees and a revenue that exceeds $16 billion per year. BlackRock operates serving its clients with the sale of mutual funds, retirement funds, among many other services. The manager is present through its offices in more than 38 countries. Although this company does not enjoy a monopoly in its sector, very few large companies do not have business with this financial institution. What is BlackRock's role? Much of the success of this company today is due to its modern computational investment risk management system. In addition, another extremely relevant factor for the growth of this company was its good positioning in the face of the last international crisis, dated 2008. At that time, as the famous British bank Barclays was in financial difficulty, it had to sell its gigantic investment fund division. Thus, in 2009, BlackRock, taking advantage of its solid equity position, bought the asset management business of the English bank for €10 billion. This was undoubtedly an extremely important move in the company's history, which made it reach an unprecedented scale on the planet. BlackRock's investment strategy. BlackRock is a company that owns several ETFs, exchange-traded funds, through its iShares platform. These products are funds that work by replicating the main indices of various countries. Passive investment has a favorable growth trend. Thus, the ETF industry expands as a consequence, and BlackRock, having the most used platform, provides advantages to its clients, obtaining a network effect. Another point that tends to contribute to the investment and growth strategy of the manager is in ESG investment, environmental, social, and governance. There is a natural trend in the world towards sustainable investments and businesses. Observing this trend, BlackRock has already started a strategy aimed at developing products focusing on ESG and thus aims to attract investors and gain even more market presence. BlackRock in Brazil. Here in Brazil, BlackRock has ETFs that replicate the Ibovespa, the small caps index, as well as the S&P 500. Aiming at the growth of the national market, it has been expanding its ETF range in Brazil. After creating ETFs for the major indices, the manager now has investment funds focused on qualified and high-income investors. It is worth noting that BOVA 11, IVVB 11, and Small 11 are pioneer ETFs in the market in Brazil. Larry Fink's letter. Larry Fink, one of and current CEO of BlackRock, recently published a letter to his CEOs and investors. In this letter, it is clear what BlackRock's vision is regarding the world and future market and investment trends. In this sense, the financial market is eyeing companies that can be sustainable, responsible, and have corporate governance. Focus on technology. Strong investment in technology to minimize operational risks is another great differential of BlackRock. From the beginning, Fink invested significant amounts in the creation of Aladdin, a network of 5,000 computers that the manager uses to monitor millions of trades and analyze its clients' portfolios 24 hours a day. All this with the support of dozens of professionals, mathematicians, engineers, statisticians, analysts, and programmers, who monitor the operations. Theoretically, Aladdin is capable of creating precise simulations of market movements and identifying how assets behave in each projected scenario. The system's accuracy made it the basis of BlackRock's solution in 2000, when the manager also started providing technology. Bet on artificial intelligence. During the TAG Summit 2023, an event that brings together investors in Sao Paulo, BlackRock's Director of Technology Investments, Jeff Spiegel, said that the artificial intelligence market is expected to grow from the current $40 million to $1.3 trillion in 10 years. According to him, the speed with which this technology is advancing shows how it is already a solid market, not a passing trend. Artificial intelligence is already happening, being developed every day. We see market professionals using AI in marketing language, lawyers using AI in contracts, and investment professionals also using the technology, he emphasized. Artificial intelligence is among the 5 megatrends that the manager has mapped for its investors to follow. The other 4 are demographic and social changes, rapid urbanization, climate change and resource scarcity, and emerging wealth. The turn of Bitcoin. In June 2023, BlackRock surprised the market by submitting a request to the SEC, the U.S. Securities and Exchange Commission, to create an ETF that directly invests in Bitcoin. A few days later, Fink publicly expressed the desire to make BTC more accessible. He even referred to the cryptocurrency as a global asset and believed it had the potential to become digital gold. In August of the same year, the manager itself declared that it had equity stakes in 4 of the 5 largest BTC miners in the world. According to a report released by BlackRock, of the total $411.5 million invested in this segment, $199 million are in Riot Platforms, the world's largest miner, $190 million in Marathon Digital, $14.2 million in TeraWulf, and $8.3 million in Cipher Mining. ESG, Enthusiasm and Retreat. Every year, Larry Fink releases a letter to investors, and in 2020, the text was quite emphatic in defending ESG principles, the acronym for environmental, social, and governance. A company cannot achieve long-term profits without adopting a purpose, Fink said in the letter, announcing that the manager's portfolio would have sustainable versions and that it would adopt ESG criteria when deciding which companies to invest in. At the time, the topic was on the rise, and big names like JP Morgan and Fidelity supported BlackRock's stance. Despite the feeling that the green revolution had begun, the euphoria did not last long. Gradually, BlackRock started facing attacks from Republican politicians in the U.S., and a survey conducted by HSBC showed that the country's investment funds are less engaged with the issue. In the first half of 2023, the bank interviewed employees from 292 asset managers around the world. The survey results showed that less than 25% of respondents in the U.S. said sustainability was a priority in their investments. In the same period of the previous year, 37% were concerned with these values. It is estimated that this change in investor posture reduced BlackRock's assets under management by about $4 billion. Although this is a small amount compared to the total managed by the company, Fink chose to stop invoking ESG values in his speeches, as the topic, according to him, has become highly politicized. However, he makes it clear that, although he no longer directly references these practices, BlackRock has not changed its philosophy regarding sustainability. He also states that issues such as decarbonization and social and governance matters will continue to be closely monitored in the companies in which BlackRock has stakes. Controversies. One of the main controversies surrounding BlackRock is the lack of specific regulation for its activities. The 2008 crisis caused enormous losses to stock markets not only in the US but worldwide. To strengthen the capital market and protect the economy from new collapses, the U.S. promoted financial reform in 2010 with the creation of the Dodd-Frank Act. Among other important points, the law regulated derivatives operations and strengthened risk controls but left out asset managers. Currently, banks operating in the segment with more than $50 billion under management are regulated by the Treasury Department, which is not the case for companies like BlackRock. Although there is pressure in the U.S. Senate for a similar law to cover asset managers, nothing has been done to date. Another aspect that draws attention is the uncertainty about the company's shareholding structure. In 2020, PNC Financial Services, an American bank that held a 22.5% stake in the manager, exited the business. At the time, BlackRock announced it would buy back part of the shares, and the remainder would be subject to a public offering. Since then, it has not been clear how the ownership was distributed. That's IT for today, entrepreneur. I hope you enjoyed it. Leave your like, comment, and share. And a big hug.